Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague here.
Hello there, I'm Yatin Mota.
Well, Yatin, it was turning out to be a marvelous Monday at one point in time, but we had reclaimed that 24,300 mark. It was looking all hunky dory, but then we saw a fair bit of volatility creep in the second half, and another bout of profit taking, which is why I think both the indices, Nifty and Sensex, succumbed to profit taking. In fact, erased all those gains that we saw during intraday trade to end lower. But it was really a tug of war between the bulls and bears, right? We saw the Nifty slip into the red, 50, 60 points decline. Then it again managed to recoup those losses, but ended the day on a flattish note, but with a negative bias. But the broader end of the markets, there's no respite there, right? Both the Nifty mid and small cap indices shaved off anywhere between 0.8% to 1.2% kind of cuts. IT continued to outperform, Yatin. Yeah, last week, IT was the marked outperformer.
Yeah.
Today as well, IT continued to outperform, and even banks were in fine fettle, both the PSU banking lot as well as the private banking names. But what did not do well and was leading losses was the entire metal pack on the back of underwhelming stimulus announcements from China. Once again, China really stopped short of coming out with any kind of significant
Hmm.
fiscal stimulus, I think, which really disappointed the metal pack. That was again among the worst hit sectoral indices today. Pharma and FMCG were the other pockets that were under pressure. Advanced decline ratio 1:2 in favor of declines. And if you look at the individual movers, Yatin, Asian Paints, of course, almost a 9% cut coming in on the back of a howler set of numbers in the second quarter. Britannia ahead of numbers, reeling under pressure. I'm sure it's the slowdown in urban
Correct.
consumption that is likely to weigh in on Britannia earnings as well. Apollo Hospital, Cipla, ONGC were the other names. On the flip side, on the gaining end, you had all these IT names, HCL Tech, Infosys, Tech Mahindra, and you also had Power Grid and Trent, by the way,
Yeah.
has snapped out of a string of multiple sessions of losses.
Downtick.
So
Yeah.
yes, that's another one. But yeah, I think broad end of the markets, quite a few reactions to
Yeah.
results.
So I think Nandita, the broader in the markets, second half where we saw some Nifty volatility, it also gave up gains. So the Nifty mid cap, small cap index were down over 1% each. The advanced decline ratio also, unlike last week, was slightly wobbly. Today, almost 1:2, where the advanced decline ratio turned out to be. So for every one stock going up, we had two stocks going down. Obviously, stocks like Biocon did well after the US FDA gave a voluntary action initiated status for the Bangalore plant, which was good. ITI, after winning record orders from the BSNL BharatNet project, that stock saw another 8% move today. Shipping Corporation and other stocks like Zomato, Naukri, Oracle Financial did well in trade. What was not doing well is MapMy India, and after a dismal set of earnings today, also the stock was down 8%. Mind you, stocks like UPL are also down 8% after a weak set of numbers. Aarti Industries post weak quarter as well as down trimming their guidance saw some 7% cuts coming in. Overall, it was a weak session for the mid caps, but stocks like Wipro, Federal Bank, Coforge, Indian Hotels, Kims, all of these stocks continue to hit fresh 52-week highs.
That's true, Yatin. But one stock that was devoid of any color today, so to say, or you could say there's a deep red on the screen, was for Asian Paints. That stock tumbled 9.5% at one point of time, but settled 8% lower for the day. On the back of dismal set of howler set of numbers in the
Yeah.
second quarter, Yatin, the stock in fact hit a over 3-year low kind of levels. Analysts have flagged off growth concerns here, in the paint sector. Of course, lots happening there, given the kind of competition that all of these players are witnessing from Birla Opus, that has achieved scale in a very less time, and they've expanded their footprint as well. So competition wise, things are not looking all that great for Asian Paints. Although when Birla Opus came in, they said that they will be targeting the second position, but clearly Asian Paints feeling the competition heat as well. But it was a third straight quarter of underperformance for the market leader in its decorative paint segment. In fact, weak consumer sentiment. We keep talking about slowdown in urban consumption, right? So that's weighed in on Asian Paints as well. And even any kind of recovery that's taken place in the rural end of the markets will take some time to really show up in the numbers. And international business for Asian Paints was also challenged. because of issues in Ethiopia as well as Bangladesh. And volume, let's talk about the volume growth. Expectations were of somewhere around 5 to 6% growth,
Yeah,
but the company saw a degrowth of 0.5%. I think that is something that really spooked the street. It reported its lowest margins in the last 8 quarters. Margins, of course, stumbled by 500 basis points on a YOY basis, standing at 15% at the current juncture. Management has pointed out that operating margins were impacted by the price cuts that the company had taken last year, but higher material prices as well as increased sales expenses also impacted margins. But going forward, there are expectations that raw material costs may ease, which may lift some
yeah,
margins, and price hikes, if at all there are any. I think recently paint companies did take some price hike, but
correct.
further price hikes will actually depend on how crude prices really behave. But most analysts who have coverage on the stock have either downgraded the stock, the
Yeah.
target price, or even cut EPS estimates for the stock. So let's see what CLSA has to say. They have an underperform call, target price at 2,290 rupees. Of course, they've also mentioned heightened competition as a risk, and they've said that sales decline was, of course, due to weaker consumer sentiment, and sales growth in fact lagged listed competition, with which also reported flattish growth. Morgan Stanley also has an underweight call, and they have noted the subdued demand and the fact that extended rains and flood also hit earnings for the company. Going forward, of course, product mix and rising rebates, employee costs, which have also gone up for the
Hmm.
company, and high selling expenses. These are some of the key monitorables according to Morgan Stanley. But let's talk about what JP Morgan has done. They have downgraded the stock to underweight. Target has been cut to 2,400 from 2,800 rupees. They've also lowered the FY25 to FY27 EPS estimates by 10 to
Correct.
12%. Of course, Jeffries, all of them actually cautious, and they have also said that the heightened competition is something that is blurring the future outlook, with Birla Opus really increasing its footprint. So, a recovery in the December quarter, if any,
Hmm.
competitive intensity, its impact, as well as any potential merger and acquisition, these are the key pointers to watch out for when it comes to Asian Paints going forward. But mind you, the stock is down over 27 to 28% from
Correct.
its 52-week highs. I think the paint companies as a whole have been under pressure and have underperformed.
Absolutely, and clearly, paint stocks as well as Asian Paints, one of the biggest falls in the stock since the last 20 years. So,
Hmm.
big cut coming in for Asian Paints. But what's doing well is auto stocks, and obviously the outlook for Tata Motors and Ashok Leyland, especially on the commercial vehicle side, has been on the positive side. H2 could be better according to both Tata Motors as well as Ashok Leyland. Today, Kotak Institutional Equities upgraded the stock of Ashok Leyland. Target is 235. According to them, the results were much better than the street expectations on the margins front. In fact, the management expects the second half auto sales to pick up in the commercial vehicle side. In fact, Kotak is seeing a 6% volume CAGR for the next 2 financial years, and they expect the profitability for Ashok Leyland to move higher because the buses order are also moving higher. Remember, they have a couple of electric buses order from various state governments, and also the defense segment of Ashok Leyland is expected to do well. So there might be a temporary blip in the truck sales, but I think light commercial vehicles, their electric buses fleet, as well as defense products should do well, which could drive up the overall earnings. Also, Nandita, CLSA
Hmm.
has upgraded Tata Motors today
Hmm.
to outperform. Target is at 968. Obviously, Tata Motors last a few weeks have been volatile. Stock is down net, given the fact that there are signs of Chinese car sales slowdown. But the management maintained, their overall margin outlook. In fact, they are confident of JLR EBIT margins guidance for FY25 and FY26. Cautious on commercial vehicles, but the new passenger vehicles, especially in the electric side, should drive the standalone operations. So, for both Tata Motors as well as Ashok Leyland, brokerages have been positive, and both stocks saw upgrade. Tata Motors, obviously because of the market volatility, gave up the gains,
Hmm.
but yes, Ashok Leyland good gains on Friday and in opening today.
That's true, Yatin. And even for JLR, they had seen some issue with 6,000 vehicles in the second quarter, right, for quality issues. But those are expected to be resolved in the third
Yes,
quarter, and that would aid volumes as well. I think, which is one of the reasons why they've also maintained their EBIT margin guidance for JLR, and that would bode well. And I think most analysts also believe that the stock may be bottoming out given its
Mhm.
underperformance over the last months and even year for that
Yeah,
matter.
yeah,
But Let's talk about another Tata Group stock, Yatin, Trent, that has been, that has in fact caught the fancy of HNIs, retail investors alike. But it did come under a fair bit of selling pressure after it failed to live up to the elevated expectations when it comes to earnings. But today, those who really fancy the stock will heave a sigh of relief because the stock has snapped out of a 5-day losing streak, and that's because of a very interesting report that has come out. Of Goldman Sachs, where they have initiated coverage at a time when the stock has already had a
Yes.
dream run.
Yes.
They've initiated coverage on the stock with a target price of 8,000, which implies 27% kind of an upside
Yes.
from the previous close price. Now, Goldman Sachs believes that the growth story of Trent will be led by the rising market share of Zudio. Zudio is a multi-year market share gain story with low competitive risk, and that would aid the stock of Trent going forward. Zudio market share, according to Goldman Sachs, is still lower compared to its global leaders. Earnings moderation, of course, came as a result of an urban slowdown, but Goldman Sachs says that there would be some kind of recovery going forward, so they're not really very worried about that. And according to Goldman Sachs, Zudio may see a 28% compounded annual growth rate over FY24 to FY35 to record sales of somewhere around 1 lakh crore rupees. The market share is expected to come up from nearly 1% to 5%
Yeah.
by FY35 if Goldman Sachs report is anything to go by. When it comes to the other businesses like Westside, it will continue to deliver steady low double-digit sales degrowth because Westside is a more expensive brand of Trent if you compare it with Zudio, right? And Star Mart, that the other business, it also has long term potential, but it won't see Zudio like store growth according to Goldman Sachs. Of course, Star faces stiff competition from quick commerce players, but competition for Zudio from online players is unlikely given the fact that the transaction size is low. The products are also fairly priced, and highly efficient cost structure as well as low discounts. Because of these factors, the online competition that Zudio faces is relatively lower. Of course, moderation in Zudio store additions was one pain point during the results, but going forward, expect store additions to the tune of 175 to 200 in financially FY26 to FY27 as demand conditions improve. That's what Goldman Sachs believes. Of course, the stock has seen a parabolic rise, even though it has seen quite a bit of a correction in the last few sessions, it has still doubled or yielded returns of 118 to 120% on a year-to-date basis.
Absolutely, and Trent, what a dreamer it has been, and this is one of those startup companies not only created with, but the kind of consistent growth that they've given. Model like Zudio has done so very well that other retail formats are trying to copy them.
Yeah.
And most importantly, Noel Tata, I think, is at the helm of the Tata Sons board. He looks at Trent as a different business. He's doing a lot of things probably which could be margin accretive moving forward, especially the lab grown diamonds jewelry business, which is something that the market was excited initially. But yes, as you were mentioning, a 27% upside is what Goldman Sachs is expecting from Trent, despite higher valuations as well as a share run up which has been there in the past few years.
Yeah, I think which is why analysts are a little cautious and they're not advising really jumping in at the current juncture. I mean, buy on dips, that's the kind of strategy analysts are adopting, because I was talking to a couple of them, and that was their view on the stock. But let's not forget, it has entered the Nifty already, right? Because of the kind of growth prospects and stock rally that we had seen. But of course, with that, I think we've come to the end of this edition of Closing Bell. It was a fairly volatile session today. Let's see what tomorrow brings. Hopefully, we can build on some gains, if we don't succumb to profit taking like we did today. But let's see how things unfold. But we have quite a few earnings to watch out for this week. Today, of course, ONGC Britannia would report numbers, but throughout the week, a lot of numbers. And I think this is the last leg of the earnings season. But with that, of course, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and catch us again tomorrow morning at 9 a.m. on Opening Bell.